Let's go live to Dave Chapman. He's the Executive Director at BC Technology Group, joining us out of Hong Kong for some insights, some analysis on what happens next in this highly volatile market. Dave, what happened to Bitcoin and I guess cryptocurrencies broadly being digital gold and a safe haven asset and a hedge against inflation? We're seeing BTC now down 50% from that all-time high in July. What's going on out there?
Hey, Dan, thanks for having me on the show again. I think there's certainly a lot of uncertainty right now, and I think there's two main reasons for that. One, we have crypto market-specific events, such as regulation, the reshuffling of mining infrastructure in Kazakhstan and China. And then secondly, it's the usual global macroeconomic and geopolitical factors, COVID, the situation in Ukraine, interest rate fears, and the result of the combination of those two is indeed short-term heavy downward pressure on digital assets. That said, digital assets are incredibly resilient, and I think there is room for optimism in the medium and long term given the structural fundamentals and overall sector growth. I think that we will, however, in the short term need to also keep an eye on policy in the United States. I think you would have seen yesterday it was announced that the White House is preparing an executive order on crypto oversight and regulation, and we might see that as early as February. Until we know more details about this specific order, some investors are naturally quite skittish as to what this could mean for one of crypto's biggest and most influential markets, and they're rebalancing their portfolios accordingly.
Okay, it's interesting because you're exactly right. The Biden administration now preparing that government-wide strategy for digital assets as soon as next month. So regulatory risk is also coming back into play here. But Dave, with regards to the price action that we've seen in Bitcoin, do you think this most recent sell-off is looking overdone, or does Bitcoin perhaps have further to fall here, particularly as we come into this really critical week for global equities and, of course, the narrative that we're going to get from the US Federal Reserve?
Yeah, it is a good question, Dan, and it's a fair question. I actually personally remain super optimistic on crypto assets and the wider digital asset space, and I don't hold that view in isolation. Last year, this space received more than $30 billion in investment through VC, private equity, and in the public markets, and that's more than the amount invested in all previous years combined. And I think, we do have to actually zoom out a little bit. Bitcoin has a textbook history of doing what it's doing right now. Taking last year, for example, first, we witnessed a rise to over $63,000 in April, which was already a 100% gain in only a few months, followed by that drawdown by over 50% when Bitcoin was back under $30,000 in July. Then in November of last year, we saw another all-time high of almost $70,000 and now back to half of what it is today, with Bitcoin sitting at $36,000. So despite being only 13 years old, Bitcoin cycles do have the tendency to repeat history. And a lot of investors are seeing where we're at right now as possibly the third cycle of decline before the next major bull run. At OSL, we're admittedly seeing some veterans in this space that are scooping up Bitcoin at these levels are well aware of what's likely to happen over the next 12 months.